Hey everyone, welcome to Founders 365 with me, Steven Haggerty. Today, I am joined by founder of Wellings Capital, Mr. Paul Moore. How are you today, Paul?
I'm doing great. Good to be here, Stephen.
Good. Thank you for coming on the show. I'm really intrigued because you're a money guy, and this is going to be a great chat because everyone loves hearing about money situations and what they could be doing better. But first and foremost, just tell me about you and tell me about Wellings Capital and what you guys do over there.
Absolutely. So we got a British name, Wellings Capital. At least I'm trying to sound British, a little bit royal, sort of
Sounds a bit
cool.
more, yeah, sounds a bit more up there, a bit more
Yeah,
superior.
yeah, trying. So no, in all seriousness, so I did flipping of real estate properties for years. I bought and sold small houses, fixed them up. Then I did waterfront lots at a resort. And I was always trying to figure out, I was always intrigued about commercial real estate, but didn't know how to get in, didn't know who to trust. Finally, we got thrown into a situation where I built with a partner, I built a multifamily, an apartment complex in North Dakota to house oil workers during a big oil boom we had here. And after that, I ended up writing a book on multifamily and had a very hard time finding apartments to acquire in the last 5 years because it's just been so overheated until now, at least.
Yeah.
And so we started investing in self-storage and mobile home parks, which are basically a land lease for people park their trailers or their mobile homes there to lease from us. And our fund was put together at Wellings Capital to allow people to make one investment, and we spread that across 20 or 30 or 40 different deals, which gives people diversification across geography, asset types, assets, etc. So that's what
Yeah,
we
mate.
do.
Amazing. I want to rewind a little bit into your past. When you started flipping houses, at that time, did you know it would be morphed into this business empire that you've built?
Oh, not at all. No. It was just, we were just trying to do something. We were kind of bored, my buddy and we heard you could find houses on the courthouse steps at an auction. And this was right before the dot-com bubble burst. And so we were able to go get a house for half price, fix it up a little bit, and sell it for full price. And our first one, we thought, this is really easy. We can do this over and over. We can do one a week. But it turned out to be much harder than that, as you can imagine.
Definitely. At what point did you and your friends sort of start taking it seriously then?
Well, after about 2 years of flipping houses, I thought, well, if we can make this much money by fixing houses, maybe we should build some brand new. So I tried to drag my friend down that road, and he didn't want to do it. He was much more conservative. So I hired somebody, and we started building houses. And Stephen, I came to the conclusion it's not a good idea to build a house from the ground up if you don't know how to tighten your own doorknob. I
Yeah.
don't know what you think.
I mean, it would be a beneficial skill to have.
Yeah, you would think. So that never occurred to me, of course. And so, yeah, I had a couple rough years trying to build houses from the ground up. It's sort of similar to what I was trying to do the last 5 years running multifamily. And I found it was much easier just to raise money and professionally invest into deals. And so that's what we do now.
And property in general, land, whatever the scape is, has always been considered one of the best investments. It's one of the investments that no matter what stage you get in, if you're in it for long enough, you're gonna probably increase the worth. When you're working with clients, what sort of clients are coming to you? Is this like their first time investing in anything? Or have they, dabbled in other things and then they go, I want to do real estate. I'm going to come to Wellings Capital because you guys obviously know what you're talking about.
Yeah, well, 10 minutes ago, I just hung up with a guy who is in Silicon Valley in near San Francisco. He and his friend are selling stocks in their startup. They have millions of dollars, and they know they want real estate. They know they want the tax shelter of real estate, but they don't want to do it themselves. And so there's a lot of people like that who are dentists and doctors and software people who would really like to be in real estate. but they don't want the hassle and the risk of running it on their own. And so they find somebody like us to invest with. I'd say that's our typical investor.
Yeah. So someone cash rich, ready to go, but time poor.
Yeah, right.
Exactly. And when you're looking for investments, or when you're looking for new things to invest in for your clients, what's the criteria you work for?
So we have a very stringent criteria. We have pages of boxes they need to check. We're very focused on finding the right operator and then trusting them to find the right deals. So we don't focus as much anymore on the deals, because we know if we partner with a wonderful operator who's investing their own money in the same deals and who's got a great track record, a great team, and they just have a wonderful history, then we know that they're going to find the right deals. And so that's what we focus on. It's sort of like Warren Buffett. Warren Buffett, in 1979, he had known Tom Murphy for many, many years. And Tom Murphy ran a company called Capital Cities. And so when Tom called him and said, hey, I need like $600 million to try to buy ABC, Buffett made a decision. It's reported in 15 minutes, because he trusted Murphy so much. And that's similar to what we do. We want to trust the operator so much that we trust their judgment.
Yeah. And for you, that obviously comes across in your values and when you work with people and the team that you've built. But when you're looking at people to allow into this fund, do you have that same criteria? Do they have to meet certain aspects, or can it just be anyone that has those issues that we spoke about before?
Yeah, we really do want them to be a match for us. We want them to understand that they're tying up their money for years. It's not like the stock market where they can go cash it in a few hours. We want them to be stable people who want a long-term investment. They don't just want to get in and get out quickly. They're not speaking gambling language. And on top of all that, the United States Securities and Exchange Commission makes us prove that they're accredited investors. Now, accredited investors inside the US means they have $1 million in net worth, not including their home, or they make a certain income or more.
Amazing. And let's talk about the property game over the last couple of years then, because you mentioned that you changed your tack in the last 5 years. How have you seen things change in terms of your business from changing that focus?
So we have found out that we were able to, once we had other people doing the operations, the asset management, the property management, we were able to focus on a few things and do them very well. And that would be vetting operators. That would be, of course, making sure they have the right deals. And then we produce a lot of content, blogs, podcasts, books, and then we talk to investors who come to us. So those are the specialties that we have, and we're very focused on those. Gary Keller, the most successful real estate agent in the world, wrote a book called The One Thing, where he talks about the importance of focusing. And so that's what we're doing more of now. We're really focusing on, those few things we're really specialized at.
Perfect. And you mentioned, obviously it's not just in the US, but it seems that every man and their dog wants to get into property investment. They're flipping houses in the UK and Europe, here in the US the same. Why do you think that it's almost become trendy to be a property investor?
I think in the United States, at least, HGTV and some of the other property house flipping shows have really made it trendy. It looks fun. It looks easy. They make it look like you can do this yourself easy. And sure, technically anybody can do it, but I think it's a lot harder than it looks. And it's become even harder to be profitable because there are so many millions of people jumping into it that it's driven the prices up. And the deals, the good deals are very few and far between. Now, with this COVID emergency that I heard about somewhere.
Briefly.
Somewhere.
I think I saw it on the news a couple of weeks ago once.
Once. But seriously, with this COVID thing, I think it's going to actually open up a lot more deals, because invariably people run away from higher risk. The truth is, they had higher risk before when property values were bid up too high. When property's going down, that's the time to buy when everybody else is scared.
Yeah, that makes complete sense. And, do you think that you mentioned that you guys do podcasts and a lot of marketing behind it? What do you find about some of these, how can I put it, not lightly, over the top eccentric gurus, in terms of telling people to, invest in property, build their wealth that way, but in realistic terms, they perhaps are not giving that best message? Do you think that people should be wise enough to sort of do their own research? Because it's so easy to get caught up in the noise.
Yeah, it is. I'm part of a community called BiggerPockets, and they take an anti-guru stance.
So glad to hear.
So, yeah, so there's a lot of gurus out there who, some of them haven't even been in the business that long. They haven't even lived through a cycle, a down cycle at least. And they're telling people, I heard straight from this guy in Miami, Florida, it doesn't matter what you have to pay, just buy apartments, whatever it costs, they're going to keep going up. And I thought he was kidding because he's very, very famous.
Yeah.
And he wasn't kidding. He was serious. And, that guy just laid off half of his staff.
Yeah.
And it hasn't even got really bad here from COVID yet. It's just starting to get bad. And so I think it's really important that people don't follow gurus. They follow time-tested coaching, mentors, and sound business strategy.
Is that person also the same person that I'm probably thinking of that you just see on Facebook continuously and has some other disputes with other people quite a lot?
I actually don't know, but this person has 1 or 2 jets, I know.
Oh, yeah, the jet one. That and the rumor last week and all that kind of stuff. But hey, for you, because obviously you're someone that obviously really respects the investments and really respects the time to build investment. Were you tempted to go down that route of perhaps building a bigger media following to get further investment, to get more money into your fund to invest in a better way?
As long as we're being really honest and we're telling people the downsides, the possible, what could go wrong, we're telling people this may not be for you, it's not for everybody. I think it's fine to have a big media following as long as you're being integrous and telling the truth.
Yeah.
It's something that we're building slowly. I don't want to go too fast. I don't ever want to be stuck with, here's an extra $1 million or $10 million coming in. We don't know where to invest it. So we'll invest it, half-heartedly in something that's not great. That would be the beginning of our ruin. How
do you, as a founder, as a business owner, as someone that's, highly respected in the property world, how do you make sure that you focus on what you should be focusing on? How do you cut out the noise and the next shiny object that probably pops up that you probably see before most everyone else? Yeah, it's a struggle every day. If you look at my biography, I've done way too many things. Is there such a thing? What's that? Is that possible? Is it possible to do too many? Oh, yeah. I was a shiny object chaser for years. And so whatever came up next that looked good, I pursued it. And now I have an extreme aversion to that. I think if it doesn't make it into your schedule and if it doesn't have a deadline, then everything else will overtake it and will rise to the top of your importance, like that phone call or, that, YouTube video or whatever. Yeah. It's got to be scheduled. It's got to have deadlines. And that's that's how it's made to be important. And of course, I want to have accountability for completing those tasks as well. How did you switch from that shiny object to that focus mentality? I've got a podcast, Steven, called How to Lose Money. And that's where we describe our stories and other people's stories about losing money. And I found out that when I was always, like, a jet has, I don't know how many horsepower, but let's say it has 800 horsepower. Well, that's to get it from the ground up to 32,000 feet. But after that, it only needs a small amount of horsepower to cruise, across the ocean. And so
if I was always in startup mode, I was always burning really, really, really hard and always in startup, always in learning mode, trying to get up to speed. And, when I got into my 50s, I was a little tired of that. And so I thought, I really want to do one thing really well from now on.
And that was the switch.
Yeah.
And that's what works.
Yeah, that works for me.
Yeah. And you mentioned that you have accountability. How do you surround yourself? What sort of environment do you put yourself in to make sure that you are accountable, you are focusing on that one thing?
Yeah, great question. So I've got a business partner who's only 26, and he is very ruthless about this, and he actually really irritates me. He will say, "Hey, I saw on your calendar you had a call for this. Why are you doing that? It seems like you're wasting too much time." And it really bothers me. But I know that it's the right thing. And it's one of the reasons I chose him and made him a partner, because he speaks his mind, and he's actually the opposite. He's very good about that. So I think we balance each other out.
What do you think annoys him most about what you do?
Well, probably that I schedule time to talk to people just to help them out. And that, maybe it's somebody who's down and they really want some advice.
Yeah.
Or, they want me to pray for them or something, and I'll do that. And he's saying, it's not part of our mission. You can't fix everybody, so.
But you can try. You can try.
Oh, I can try, of course.
I'm really curious to know, from where you sit, what do you think of the state of just general entrepreneurship at the moment? Let's just ignore the current worldwide COVID situation, but how entrepreneurs are sort of making their money, growing their businesses. What do you think about it?
I think it's a great time to be an entrepreneur. When I was growing up, I don't remember ever meeting an entrepreneur except the pharmacist who ran a little one-person drugstore at the corner. But I didn't know any entrepreneurs. I didn't know a single person who worked from home. Never heard of that before. And now half the people I know are entrepreneurs or work from home. And I'm not talking about during COVID only,
Yeah.
And so I think it's a great time to be an entrepreneur. And I think it's, honestly, at least in the United States, I think that a lot of people who are younger are not really applying themselves to the level they need to be great. Mm-hmm. And so if you're one of those people, and Steven, I'm sure you are, who's really applying themselves and really, really focused, you're going to be able to be head and shoulders above the crowd. And I think that's great.
Yeah, it's a lot easier now for people to effectively make money, right? Yeah. The barrier to entry is so low to be able to make money online, or even not even online, to be honest. You can go out of your front door, and if you have the willingness and the mindset, you can come back with more money in your pocket.
Right.
And what's going to be really interesting over the next couple of years is obviously education about how's that's going to change, and how are we going to be educating our future generations for business, for entrepreneurship? And I actually think that, I don't know if you agree with this, but the COVID situation is going to highlight a lot of people's desires to do more with their life and desires to do more with their business. Because again, when was the last time we were sort of forced to stay at home and forced to sit and think about things? Not have to worry about getting on a commute or even driving into an office, even if it's 10 minutes away.
I absolutely agree. I think it's a great time to hone your skills, to reevaluate your life. Where do you want to live? What do you want to be doing? Who do you want to do it with? Pull together your team, get your tribe. That would be followers, people like you have, who are following, what you're doing. And then be ready for opportunities on the other side, because 12 to 24 months from now, I predict there might be some of the greatest opportunities ever to buy that business or that restaurant or that piece of real estate at a deep discount. It's very unfortunate, but it's going to happen. It always does. And this is your opportunity of a lifetime right now to get ready for that.
So if someone was going to get ready for that right now, what do you think they should be doing?
Well, I think they should really figure out what they want to do exactly, and then go learn everything possible about that. Listen to every podcast, read every book you can, get the training, and put together your team, people you want to partner up with. And that might be a mentor above you who's, got 20 years in front of you, or it might be bringing on an assistant below you or at your side. It could be both. But I think that's what people really need to be doing, because, if you wasted this year watching Netflix, binging on Game of Thrones, you wasted a really, really important year.
Yeah, like you said, the O word, the opportunity that's in front of us. And I don't even think it's, this time. That opportunity is always there. It's just right now it's easier than ever to do it.
Right.
You've always got the time. I'm a big believer in there is enough time in the day if you prioritize your time correctly.
Right.
So Paul, listen, I'd love to future pace a little bit in terms of what you're doing next. So what's next for Wellings Capital? What's next for you? What sort of plans do you have in the next couple of years?
Well, real specifically, we've found a lot of people who want to avoid capital gains tax, which is, a tax on a large profit that when they sold their piece of real estate. So we're setting up a tax deferred vehicle called a Delaware Statutory Trust to allow people to defer tax when they sell a property. They can buy into this and they can keep the tax ball in the air, if you will. So that's one specific thing we're doing. I'm getting ready to publish my third book, which is a book called Storing Up Profits. It's about self-storage, which is a really big business in the US. I'm working on another book called Warren Buffett's Rules for Real Estate Investors. I'm taking Warren Buffett's principles and I'm applying them from stocks and companies. I'm applying them specifically to real estate. And I've already got about 19 chapters out of 30 of that done. And and I might even write a book on mobile home park investing.
You're a busy man, Paul. I'm curious to know, from your standpoint, do you think Buffett is one of the greatest investors of all time?
Absolutely. Yeah, I think he is.
And why do you think it is?
Well, his track record alone is staggering. If you've ever seen a chart of, the S&P 500, the Dow Jones Industrial Average, the stock market, if you look at it by itself, it's pretty stunning how much it's gone up. But if you look at it compared to Buffett, like you almost need a log scale, like an exponential scale to show the difference. It looks like this, where Buffett's, like this. It's stunning. I mean, it's mind-boggling. It's hard to even believe.
He is. He just seems like one of the most switched on fellas out there. Definitely someone I would love to have at around a dinner table sort of evening conversation.
One of the great things about him is he not only does a great job, but he also has really funny ways of explaining it. And so he has great sayings. Every chapter we're doing features some of his great quips and wisdom.
Does he know you're writing the book?
No.
Oh, you definitely have to send him a copy then.
I definitely will.
Yeah. Paul, listen, thank you so much for coming on. One of my final questions to you, and I think you kind of already answered it, but I'd love to round up on it. But if you could give any entrepreneur, any sort of successful entrepreneur that has, or getting to that stage where they're going to have cash in the bank, what would 3 tips on your experience be for the best way to use that cash?
The first thing I would say is a general principle, and that is look for real wealth. It's nice to have a limousine or a mansion or a castle, and those things might show that you have wealth, but true wealth is assets that produce income. Look for opportunities like that. Warren Buffett said, if you don't learn to make money while you're sleeping, you'll have to work till you die. And so it's really important to create assets or to invest in assets that are really true wealth, that create more income flow on the side, or from the assets, I should say. The second thing is look to invest and avoid speculation. Speculators are the most famous investors in history because they're the legends. They're because they're so unique and rare. But investors make a lot more money on average over time. Now, investing is when your principal is safe and you've got a chance to make a profit. Speculating is when your principal is not at all safe and you got a chance to make a profit. I recommend that people stick with investing, stick with what's safe, and grow their wealth slowly. That's my second piece of advice. My third piece of advice is, for some people, consider passively investing in commercial real estate. The Forbes 400 wealthiest people in the world, almost all made their money or have invested since in commercial real estate. And it is a great place to shield income from tax and to grow a fortune.
There you go. I love those 3 tips, and do not worry, I'll be taking lots of notes from this own conversation. Paul, thank you so much for coming on. If anyone wants to get in touch with you, find out more about what you're doing at Wellings Capital, perhaps, buy your book, what's the best way for them to do that?
All right. So you can get hold of me at wellingscapital.com. That's WELLINGSCAPITAL, wellingscapital.com. You can find out more about my books there, and my books. My first book, The Perfect Investment, is on Amazon now, and my second book, Storing Up Profits, will be on Amazon by July.
I'll definitely be looking out for that, Paul.
All right. Thanks, Steven.
Thank you so much for coming on, and thanks everyone for listening and watching to Founders 365.